Yo, yo, yo. What's up, YouTube? This Clarence over here at Pursuit of Freedom. Uh, it's been a minute. These things are gonna be stretched out. Probably gonna be a little few and far in between, especially with me trying to get education back on board. Go ahead and get to this bachelor's degree. So the slow plays I'm transitioning over to. There's several reasons why I'm doing that. Several reasons. Reason being number one, I really want to talk about, just to get to it. This is TC 2000 software. The S&P 500 is the topic of the day, and how looks can be deceiving because all I do is look at stocks. All I do is look at stocks. You know what I'm saying? Uh, when it comes to these here charts, so something that I've grown a serious passion for over the last few years. Uh, but it didn't just start today. Started over a decade ago. But as far as trading versus investing, two complete different sides of growing money. It's still all growing money, but it's two complete different spectrums. One is way more in depth, way more advanced on the knowledge base. Anybody can just buy a stock and hold it, so that typically I don't think gonna make you rich, but it's gonna grow you some money. You know what I'm talking about? Growth is better than nothing. But anyway, I want to get at a topic, that looks can be deceiving. Here it is in the afternoon, on another day, slow day after slow day after slow day, right? I got to pull up my little thing here, you know what I'm saying, give myself some, because I know I did the video over a month ago, lazy bull market, lazy ass bull market that we in. This is over a month now. You see it right there, right? Uh, but I did some research trying to figure out what the weight is in these companies in the S&P. So let's go ahead and go by price and pull up the S&P. Now, when you zoom in, this drop looks nasty. Looks nasty, but it's only like 0.65%, like a little bit greater than a half of 1% pullback. Only $20. So that's not the biggest pullback. You know what I'm saying? But looks can be deceiving. During the time period from 2017 all the way through 2018, which was truthfully my beginnings of my investigation. Actually, it's like more so like late 2016, like around November the 1st or whatever. You know what I'm saying? I went because you can go to school for years and years and years. And even though I'm going to get back to school, it's kind of oxymoron, I guess. But I planned on going to school anyway. You know what I'm saying? I still got a hunger for knowledge that just has not been satisfied. Uh, but I graduated. You can go heavily into debt. You can study, 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 study. Many millennials already know this. We have a student loan debt crisis of astronomical proportions for many different reasons. That's almost really getting into a different subject for a different day. But anyway, just to stay on topic because I can talk all day when it comes to this market. 2017 to 2018, I witnessed the bull with some rage, as in the bull market. The bull market still had some serious rage. Now, in 17, we got this big panic. 2018, we got this big panic. We just on this up and down, chopping, heading sideways, trying to grind higher cycle. You know what I'm saying? But during this 2017 all the way to 2018 period, I've had well over 1,000 stocks on this thing. And I've only had 100 stocks on my biggest watch list, which is everything, right? Every single day I get to the market, at the market open between 9:30 and 10 o'clock, there will always be beautiful support to resistance play right there, by the way. Sometimes you can truthfully just buy support levels. Stock dips to a support off of a big push higher. I don't know how much that push is. Well, up 13%, but 13% in a day, that's gains. That's gains. But anyway, let's get back on track. But I will be looking at these stocks, man, every single day. I'm in front of the stock market. And at least at a minimum, sometimes even more, well over this number. I got 2,300 stocks on this list right now. You know what I'm saying? Uh, and at least 21, that's roughly 1% of 2,000 stocks, will be up 20% or better. I have not seen that in months. So my trading has just been slowing down and slowing down, slowing down. I don't feel the need to jump in and trade every day. I've learned the hard way over the course of a few years of practicing patience. Looking for some of these slower type setups like this where you have to be a little bit patient. You know what I'm saying? Uh, but where you got support, that's some of the easiest and best buying, and that's my current trading strategy for right now. Support instead of breakouts. But I still love the breakouts. I spot them and I still look for them. I just need the capital. But anyway, so there's extreme weakness in the market. How long have I been yapping? I've been yapping too long already. All right, 6 minutes in, I might be able to salvage uh, the timing in this video. So the market has been weak. I mean, I got all the big players in here. If I just go back to price, Amazon in there, Google's in there, uh, whatever this is, Chipotle Mexican Grill, just going from top to bottom. AutoZone. AutoZone is a strong company. Look like we get all our car parts look to be from AutoZone. Where's O'Reilly? O'Reilly's in there. You know what I'm saying? Boeing's in there. I got all of the big name. Netflix, which took a dump today. Netflix has been dumping for a little bit of time now. It's 5% off of its highs. But I got all of the names in this list. And even if I didn't, what I love about TC 2000, I can just click, bang. I got the entire S&P 500, all 504 companies in my face every day. And I flip through these stocks every day. That's the easiest way I can look at 500 companies right there. But I just stick with the master plan, my master list, right? And I look through from the hottest to the coldest, or I flip over and look from the coldest to the hottest. But either way it goes, man, looks can be deceiving, and here's why. This is an older video, not an older video, but this is an older news release. 5 companies are carrying the S&P 500, and that was really what I wanted to talk on in this video. I just get a little long-winded, but anyway. So it can be a mere 5 companies. I ain't finna read all of this here to you. You can look up 5 companies are carrying the S&P if you want to read up the whole thing. It wasn't really a long article, but this I found interesting. You know what I'm saying? And they calling it the Great Narrowing. You know what I'm saying? Change in market cap because the S&P wants to align the companies with the biggest market cap near the top and give them unequal weight. See, because like if you had 100 companies, each company, like in the NASDAQ is NASDAQ 100. So if you had just 100 companies, you would think that each company would be equally weighted to the tune of 1%. And why aren't they equally weighted? They should be. If they're the best, you should just let it be equally weighted. But you can deceive those numbers a tad bit. You can deceive the look of the market a tad bit if you give other companies greater weight, like Facebook, Apple, Amazon, Netflix, Google, the FANG stocks right there. But you know what I'm saying? It's crazy. Changing market cap. These 5 companies have blown up. So they're going to be at the top of the overall weight in the S&P 500 because they're going to move the best. They've captured the greater market. You know what I'm saying? And you see the differences. There's an additional 495 companies at least. Actually, it's more than that. It's 499 companies because it's 504 companies in the S&P. So 499 companies market cap has fallen while just 5 companies market cap has grown. Right? So you got some weight over here. That was a 2017 article. This right here is another one of my favorite sites when it comes to looking up stocks. And I'm introducing this one to you today because I don't think I did a video on it. I may do the video on it and come back with it because this is a great stock. I mean, it's a great chart. It's a great stock site chart. Slickcharts.com. You got 500 companies up here, and what I like about it is it gives you the weight in this particular article. You know what I'm saying? So the Microsoft is worth 4%, 4.2, Apple 3.5, Amazon 3.3. That's already 10% of the whole S&P 500. So if those three companies do good, it can honestly look like the entire S&P is doing good. You know what I'm saying? Because that's 10%. You know what I'm saying? Three, and three is nine. So if you add one more to that, that's 10%. Facebook puts this at 11, darn near 12, because that's 1.9. Berkshire Hathaway, you know what I'm saying? You're going to get down to where, because out of 500 companies, equally weighted should be 0.2. 0.2, 500 companies, every company would carry equal weight. But I bet the price of the S&P would be a lot lower if they weighed the companies equally. But you'll get to zero point zero 0.02, you know what I'm saying, at 70, 79, 73 right here. You know what I'm saying? So you get to where the weight is supposed to be. The weight to make this equal will be zero point zero 0.02. 100 companies down before you really get to 0.020. So over 400 companies, well, not over 400, over 380 companies are beneath an equal weight for it to be equally weighted. Now, I know I'm going a little bit too far in the math or whatever with that, but just saying that looks can be deceiving because they're going to give certain companies greater weight, right? And then you got the largest holdings. Of course, you got Apple, Amazon, Facebook, Microsoft. It's not included in this. So this made me feel like this was an old article, but this is Investopedia, and this is April the 30th, 2019. So this is actually, you know what I mean, a tad bit up to date. You got Microsoft at 4.16, 3.7 Apple. You know what I'm saying? Once again, that's 10%. And I always try to compare articles too. I mean, I don't just read one and be like, and just run with that. And this one here was another informative thought. The date was May 15, 2019 when it was updated. So I read through this here. You know, a lot of these articles going to give me much of the same. How long I've been yapping? I'm already at 12 minutes. But this is how the S&P is supposed to be broken down. I don't quite like this. So I'm going to come back over here to my main search. What stocks carry the most weight in the S&P? Right? And one thing I always do when I'm doing my research, let's look at some images. Oh, I got a pie chart right here. Click on a pie chart. It's going to take you to the website. Seeking Alpha. This is one of the stock sites that I use quite frequently. And I got a pie right here. No, I'm not registering for nothing. Can I get off it? Oh, man. So you're kidding me. You're kidding me with that. All right, let's do that again. See if I can get back up without seeking Alpha trying to get me to sign up for something. Right? But see, technology is supposed to carry 25% of the weight, financials 14, healthcare 13. So that's over 50% of the pie right there. You know what I'm saying? I love saying cut you a slice of this cake out here. You know what I'm saying? So them three sectors make up 50% of the entire thing. So it's not going to be equally weighted. You know what I mean? Because consumer discretionary, consumer staples, industrials, energy, you know, you can read the whole 9 yards on that. But this is how the pie is supposed to be broken down with the different sectors, right? Uh, and I just wanted to do a video on this because fame is going to carry the market higher. It's going to carry the market higher. So when you're looking at this here chart over here, or go back to price, and it comes to S&P, and you're like, man, we had all-time highs. You begin to get an overall feeling of like, man, 500 companies are doing good. Look at the Wilshire. I mean, the whole market index, total market index, 5,000 companies are doing great. America is on fire, but the weight of these individual companies can be misleading because out of 500, which is truthfully the measure that is most often used when talking about the S&P or talking about the American stock market, right? Talking about the stock market in America. The S&P is the one that most is referred to because it represents 500 companies to give you a broader picture, but that can seriously be misleading. It can seriously be misleading. Now that don't mean that there aren't opportunities out here. I don't know. I might be able to find either to the long or the short side. You know what I'm saying? But another thing I look at too is like, man, I start to get garbage prices in my top. I ain't took this here stem cell off yet, even though it's beneath a penny or right at a penny. Let me see. All right, let me look at the intraday chart. Low volume, that's pretty dry. Woo! I like this chart here. This when they get ready to get shorted. Had a blow off topping type candle for the day, but there are opportunities out here still. You know what I'm saying? But you're taking on a lot of risk, and if you don't catch this thing right at the beginning of the day, no, not even at the yeah, right at the beginning of the day. If you don't catch this thing, that's only 10%, which but 10% is great. You know what I'm saying? But it took a long time for it to really heat up and give you the pop that carried it only 20%. And I mean, I'm used to seeing so many stocks well above 20% that I just know that there's weakness out here, that it ain't as strong as it looks. And that's really what I wanted to talk on. I'm 16 minutes in. My wind done got a little too long already. Hope you found some of this information informative, man. Uh, just realize that looks can be deceiving, and that's some of the reasons why I ain't been trading, because the strength is not really here. I got the video out there already about this bull being lazy. I could have did that video 4 months ago, but I'm still in a good position because at the beginning of this year I started trading this account at just $100,000, uh, and I had some bad trades this week. July the 15th, Monday, I had traded was up a little bit and had came down humongous, getting greedy, just going back to the well a little bit too many times, and ended up giving my gains back and then some. But this is paper trading. This is practice makes perfect. Like Michael Jordan when he mastered the game of basketball in the backyard in North Carolina after a coach said he wasn't athletic enough, he wasn't good enough. This is flight simulation, man. And I'm going to always recommend practicing, building the skill. You know what I'm saying? I got money in slow growth companies right now. And I like how things is looking for some of my slow growth companies. You know what I'm saying? Pace is looking pretty good. I wish I had some more money on this dip to throw at Pace in Pace right now. In phase. It's on the growth. I was watching CEI for the big spike it had. I just watched a video where one of the traders that I'm learning from, Stephen Ducks, locked in like something like 50, 60, 70, $80,000 on this big wash back down. 67% drop because this company typically ain't doing nothing good, really. You know what I'm saying? Etsy over here, need to throw some money at Etsy. You need to do a video on Etsy. Man, see, I could talk on this all day. All day. I've been yapping way too long. Uh, give me the thumbs up. If you didn't like it, give me the thumbs down. Subscribe. Just know that looks can be deceiving, but that don't mean there ain't opportunity out here. You know what I'm saying? You already know what it is. Pursuit of freedom.